All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Since we talked this morning, we saw the comments from U.S. President, and what happened? Well, it pushed the market up on some pretty good volume. Just pushed the market up over about a 15-minute period. So we had about a 15-minute rally, and since then, the market's just been absolutely flat, to be expected with now the market kind of perceives, hey, okay, you know what, this isn't going to escalate too much more from here, so now what? Right, so now what? And the market has to go and ask itself, questions about, overbought valuations, upcoming earnings, the recent economic data, right? Just because it's not going to explode into a powder keg, or, the market doesn't expect it to, explode into a powder keg, doesn't mean that the market now goes, oh, well, that's worth 100 points to the upside. We may still see further rally here. In fact, most of the metrics, they remain bullish throughout all of this. But, it doesn't mean each and every stock's going to be, pushing that way. We are seeing an autocorrect type action with oil, with gold, with bonds. In fact, oil is now down $3 as it is just not finding a bottom. We saw it kind of hit this low down here around 59. But oil has gone all the way down and broken below 60. And, that tells you a lot about what the market is expecting, or maybe better said, what it is not expecting, going forward here. So we see that kind of unwind trade on. A lot of stocks that have been in rally mode are continuing on their path. The Adobes of the world, the Microsofts of the world, the Apples of the world, just carrying onward with their trends, and there's no sign of that letting up or slowing or stopping. Now for the challenge, right? I'm in cash here for the challenge, and looking to get into some positions. We have two signals on the board. We have IBM and SBUX, both with bullish signals here. Now, unfortunately, I cannot trade either of them, and I would like to. In fact, I'm going to trade one or probably both personally, but for the challenge, I cannot do so here, and it just comes down to the options. When we got into SBUX last week, I went to an option that was 3 weeks because of earnings. Well, now that same option's only 2 weeks away, and so it alters the risk reward dynamic in a significant way. It's just not something that willing to do for the challenge until we hit 10,000 in gains. At that point, willing to do it and go for it, and that is in the that's in the challenge rules as we've put them, and then we have. IBM, which is a similar situation. If you look at the options, they just don't, they just don't pay very well. And so I'm not going to be able to get into either of these. And it's something I would really like to get into. Something I was kind of hoping Home Depot would trigger, but it has not triggered here today. Thought, man, maybe MGM will trigger, but the consolidation risk on MGM is actually really high. I was surprised to see that. But that means I'm going into the close here with cash. We do have things that could trigger very easily. A Disney on a little bit of a rally could trigger. A few others that we went through earlier this week, could trigger on just a little bit of a rally. We saw a 3-7 crossover in FCX the other day, but, no real trigger there. So I'm going to go into the close here with cash and, wait for the right opportunities. I mentioned this challenge at the beginning of this challenge. I expect that we'll probably trade around 40 to 50 to 60%, but somewhere in that 40 to 60% area of the signals, just because the watch list is too big, to go out and trade them all. If we wanted, a higher percentage of, trades made based on the signals that come in, we'd be cutting the watch list by about 15 to 20. but that's just going to be a product of. I'd rather have the extra signals and the ability to get in than a little longer to downtime with various things. So those are that's the challenge here today. Now, it doesn't mean there are not trade opportunities out there, and there's some interesting things. If you go take a look at some of the gold miners, they are absolutely getting shellacked here today in a big way. And if you look at gold miners, typically after a day like today, the path of least resistance is lower. And, I mentioned earlier this week that I put on a put position in gold, personally. Not a huge position, but I pulled off a big chunk of my upside gold position. And, I've thrown some put on it and, a little bit more than just a protective put. And I thought last night, well, that's going to get hammered. But it's reversed nicely here today. Do we get down into the 144, 143 area by the time, some of this stuff wears down? I think there's a good chance of that, here with gold. If you take a look at some of the oil plays that are out there, a third day of pullback and even a retest of the 200-day moving average and something like Halliburton, seems to be on the table right here. With it, and really isn't dependent on the overall market direction here. If you take a look at something like UPS, coming off of the lower Bollinger Band and breaking back above the 7-day moving average, I love these types of setups. I'm not a big fan of the volume element on UPS over the last several months. But, very nice little bounce point. In fact, if UPS opens a little bit higher tomorrow, I will likely jump into it personally. There are things like Walmart that I'm kind of looking for an upside, potential here, but they continue to, climb that lower or fall on that lower band and, continue to show, hey, more downside to come. You want to play something like this, it's very easy. You short it with a stop on today's high. And just keep adjusting the stop to today's high, as it progresses downward. One that I've watched a lot here today is Caterpillar, and this is one that I haven't traded for a little while. My brother texted me yesterday. He said I bought Caterpillar puts, and he very all or nothing in a lot of his trades, right? And he had pulled off some really good ones and said, I just got a hunch. And, he bought some Caterpillar puts. I think he thought, they were going to play off really well last night. And then the market opened today. He went, what? But it's one where if we see something like a Caterpillar break below today's lows, right? And a lot of these stocks, I think you can look at the same way. If you want to play them to the downside, today's lows. If you want to play them to the upside, because we could still see significant upside come in, you play it off of today's lows. And I do think that's a very key level for many of the stocks that are out there and makes for a very easy stop point for upside traders and a entry point for downside traders if that level were to break here. General Motors. Here we go. We have a stock that's fallen from 37 down to 34. So 37.5 down to 34.5 on this lower Bollinger Band. Just a very typical place to want to bounce. Now, having traded General Motors many times, I know it can overextend a little bit here, and so I'm looking for a little bit overextension. And we see it start to break below 34. I'll probably look to catch some on the upside, but there are a lot of a lot of opportunities that are unfolding with some of the shakeout that we've had out there, and some of the things that are relatively easy to play, right? They're, stop on, today's high or today's low, depending on which way you decide you want to play it. And I think the bullish, bearish arguments in this market are very compelling and suggest that we are going to see a significant move over the course of the next 3 to 6 weeks, and that sets up well for for anyone looking on a trend. Your bears are going to look at Apple, say, "See, it's got to come down. It's got to come down eventually. It's gone up way too much without a correction. It's got to have a correction." And ultimately there will be a correction, but you're going to call the top on it. That's a very tough challenge, very tough chore. But it's one where, fine, if you want to, you can use use the low from the prior day as your entry point, and put a stop on the high from the prior day, and really kind of shift the odds in your favor a little bit, and at least give yourself a risk reward scenario associated there with it. I really like the price action on AT&T today. In fact, I went and I picked some up here this morning, breaking above the highs from the last few days, right? And while it's not a challenge signal or anything like that, it is breaking above those highs, pushing into a kind of this new short-term high. This is something, since we saw the activist investor element come into AT&T, the stock is still drifted on higher. It's only about $2 higher than where it was then over the course of 4 months. But very nice price action on it here, and a very simple stop with the 7-day moving average. Really setting up on it. So those are some of the things out there, from a tradable standpoint, and some of the things you can look for on both the upside and the downside. As far as the challenge goes, I'm going to continue to run the process, right? Same process, right? Signal. Okay, option valid or no. Option valid, go. Option not valid, I'll wait. And we'll continue to do that day in and day out as we go forward over the coming months. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you later. Take care.